The share price of the commercial electric vehicle and fintech firm Ideanomics, IDEX, climbed by 152% in 2020 and jumped by another 178% in the first few weeks of 2021. In this video, we'll tell you why Ideanomics stock is a buy now. Number 7. Why EV charging play Ideanomics is getting a jump. The Ideanomics earnings report highlights the company's switch to being an EV charging play. This includes its revenue for the year coming in at $26.8 million. This is lower than the $44.6 million reported in 2019. However, IDEX notes that $40.7 million of that revenue came from a digital asset management services contract that produced no revenue in 2020. It's also not expected to generate revenue in the foreseeable future. Instead, the company notes that the majority of its revenue, $19.5 million to be exact, came from its EV charging business. For comparison, EV revenue in 2019 was $2.7 million. That shows a year-over-year increase of more than 600% for Ideanomics EV revenue. Gross profit for 2020 also came in lower at $2.1 million as compared to $43.1 million in 2019. Yet again, the company attributes this to the sale of digital asset management services, which had a gross margin of nearly 100%. The positive earnings news for IDEX today is catching the eyes of investors. As of this writing, more than 29 million shares of the stock have changed hands. That has it quickly approaching its daily average trading volume of 43.5 million shares. The recent earnings news may have some investors looking to pick up shares of IDEX stock, but that might not be the best idea. Investor Place's own Dana Blankenhorn has this to say about the company. If you're a young speculator willing to read tea leaves every day, getting in and out of shares on a hunch, you can play IDEX. If you're an investor, you're better off elsewhere, even if the latest play turns out to be a good one. Number 6. The electric vehicle industry today. Global sales of electric vehicles have grown rapidly since 2019 and continue to gain momentum. Much of the focus has been on the consumer market for passenger vehicles, but there is also potential for strong growth in the commercial EV market. The global market for commercial EVs could reach $29 billion by 2025, according to Ideanomics. The company is also involved in the high-performance electric motorcycle market, which is projected to grow at a compound annual growth rate, CAGR, of over 35% globally from 2019 to 2024. The shift to EVs is expected to change the energy industry permanently. Gasoline demand may have peaked, with the adoption of electric vehicles offsetting the growth of mobility in developing economies, according to the International Energy Agency. Electric vehicle stocks rallied sharply in 2020, and although they have pulled back in March along with technology stocks, they are expected to continue rising over the long term. The Global X Autonomous and Electric Vehicle ETF DRIV gained more than 61% last year and is up by 1.8% year to date. Number 5. Ideanomics expands rapidly across EVs and fintech. Founded in its current form in 2017, Ideanomics is based in New York and has offices in Beijing, Hangzhou, and Qingdao, China, as well as operations in Ukraine and Malaysia. The company has transformed from media company to making strategic acquisitions and investments and forming joint ventures. The company has invested in Malaysian electric bike manufacturer Trialtrek, wireless EV charging firm Wave, artificial intelligence AI service provider Intelligenta, and financial platform D-Bot, among others. It acquired Wave and completed the acquisition of real estate title and escrow services provider Timios Holding in January. On March 9th, Ideanomics said that it had acquired a 20% stake in Italian electric motorbike maker Energica Motor Company for $13.2 million, expanding in the European market as a complement to its Asian business. The company's most recent financial report for the third quarter of 2020 showed that its revenue increased for the third consecutive quarter to total $10.6 million, of which a record $10.1 million came from its Mobile Energy Global MEG business. Its net loss fell to $8.29 million from $13.7 million a year earlier. The company will announce its fourth quarter earnings on March 31st. The business will transition to reporting quarterly sales rather than monthly deliveries as it continues to diversify its revenue streams. Ideanomics Chief Executive Officer Alf Poor said, "Our focus is to deliver growth across all of our subsidiaries in terms of our objectives for 2021 and beyond." Poor added, "Our 2021 revenue streams are already more diverse than we saw in 2020. In 2020, the IDEX share price rose from 79 cents at the start of the year to $1.99 per share as investors took positions in electric vehicle stocks to get in ahead of the potential growth." Number 4. Ideanomics strategy makes sense. The company appears to be skillfully and intelligently avoiding the most competitive parts of the EV sector. Specifically, the most crowded part of the sector appears to be the manufacturing of higher-end EVs for consumers. Ideanomics does not appear to be significantly involved in that business. Instead, in addition to the middleman activities that I described earlier, the company has bought stakes in an electric tractor maker, a producer of EV chargers, and a maker of e-bikes. It also has a unit that makes battery electric and fuel cell trucks. Importantly, recent data indicates that the company's strategy is working. Specifically, it delivered 439 EVs in December, up 166% from November, and in quarter 4, it delivered 706 EVs, an increase of 13% versus the same period a year earlier. Moreover, the delivery data does not include the deliveries stemming from the deal with Ideanomics made with BYD and Didi Chuxing. Under the contract, Ideanomics will buy 2,000 EVs from a joint venture of BYD and Didi. Ideanomics is poised to deliver the EVs to drivers that provide ride-sharing and taxi services, starting in the first half of this year, the company indicated. Number 3. Ideanomics forecast for 2021. NASDAQ IDEX. Ideanomics forecast annual earnings growth rate of not available is not forecast to beat the U.S. software application industry's average forecast earnings growth rate of negative 0.95%. And while it is not forecast to beat the U.S. market's average forecast earnings growth rate of 21.96%, Ideanomics earnings in 2021 is a negative $106,227,000. On average, one Wall Street analyst forecast IDEX's earnings for 2021 to be negative $26,286,850. with the lowest IDEX earnings forecast of negative $26,286,850, and the highest IDEX earnings forecast at negative $26,286,850. On average, one Wall Street analyst forecasts IDEX's earnings for 2022 to be negative $11,948,568. with the lowest IDEX earnings forecast at negative $11,948,568, and the highest IDEX earnings forecast at negative $11,948,568. In 2023, IDEX is forecast to generate negative $2,389,714 in earnings, with the lowest earnings forecast at negative $2,389,714, and the highest earnings forecast at negative $2,389,714. Ideanomics forecast annual revenue growth rate of 91.92% is forecast to beat the U.S. software application industry's average forecast annual growth rate of 21.96%. Number 2. As good as it gets for IDEX stock. Somehow Ideanomics has moved on to bigger and better things. Well, kinda sorta. In an investing environment that's proven unafraid to balloon company valuations on nothing more than a wing and a prayer, IDEX has taken advantage of those conditions. IDEX shares have grown to more than $1.13 billion in market cap in 2021. The company has also smartly raised capital on the back of investor optimism and giving it a new lease on life. That's not all, though. Ideanomics has pivoted into the electric vehicle space this past year with its foot on the pedal and a handful of acquisitions. Number 1. IDEX stock weekly price chart. Ideanomics, IDEX, bullish looking uptrend setting up nearby buy decision. As the illustrated weekly view of IDEX stock reveals, a decent looking uptrend has formed over the past year since shares hit an all-time low. What's more, there's reason to believe this particular trend in motion will stay in motion and offering investors a nearby hedge buy decision aligned with the price chart. This month Ideanomics series of higher highs and higher lows has formed a fourth bottoming pivot off the 62% Fibonacci level. Specifically, the price action has produced an engulfing doji or decision candlestick followed by a pair of inside candlesticks. And today, with shares on the cusp of signaling an oversold bullish stochastic crossover, the technical evidence for going long IDEX in the coming days appears compelling. My suggestion would be to monitor IDEX for a crossover from the secondary indicator alongside pattern confirmation above this week's high of $3.41. If those conditions are met, a May $2.50 to $6 collar looks about right for both exposure and potential profiteering without investors getting too far ahead of themselves. Do let us know in the comment what are your thoughts about this stock. Please subscribe to the Stock Advisor. Thanks for watching.